For more on the themes to watch, let's bring in Alex Shepard, founding partner of ETF Action, and Todd Rosenbluth, the head of ETF and mutual fund research at CFRA Research. Gentlemen, good evening. Thanks for joining me, Alex. So the flood of money keeps going into ETFs, but where is it actually going within that?
Yeah, I mean, you said it. It was another record year for ETF net inflows, topping over $900 billion. By and large, the majority of those flows are still going to some of those more core beta strategies in your broad-based indexes. But we also saw proliferation in product launches. We saw almost 500 product launches this year. A lot of funds are continuing to flow into some of these new, more niche products that kind of work as satellite positions. But by and large, the lion's share certainly went to some of these core beta strategies.
One that gets a lot of attention, Todd, is the ARK complex, a bunch of ETFs there, including the biggest ARK Innovation Fund run by Cathie Wood, which had some pretty poor performance this year after a blockbuster 2020. How did that affect flows and the overall mood around ETFs?
Well, it actually didn't impact it at all. ARKK saw strong inflows despite the underperformance. But what ARKK and the ARK franchise did was set the stage in 2021 for the year of active management. We saw success out of products from JP Morgan, JEPI. We saw new entrants like Horizon Kinetics with INFL that gathered almost $900 million in its first year. We saw other firms enter the marketplace and set the stage for Capital Group to enter the market in 2022. They, of course, are behind the very popular American fund. So actively managed equity and actively managed ETFs in general really punching above their weight, about 10% of the overall flows if you include what the conversions of some of those mutual funds from dimensional.
So, Alex, how does it set us up for 2022? Because while thematic investing, picking out certain themes in the market, was popular, a lot of them didn't work. It wasn't just ARK. It was Chinese internet, got a brutal beating this year, and those investors in some of those stocks, high-tech growth. Does that mean they are set to outperform next year? What's the strategy?
Well, great question. And the thematic space is still widely misunderstood. It used to be in the earlier stages that everything was extremely tech heavy, but now we're starting to see this differentiation in the product set. You can invest in different themes like rare earths or precious metals that aren't necessarily going to be tied to just a tech sector. I mean, you talk about Cathie Wood's lineup. She had a tremendous amount of net inflows, as Todd mentioned before, but despite that, I mean, a lot of the money that flew into those funds, they actually came in near the 52 peak highs. So going forward, if you're still looking at kind of some of the cyclical play, if you believe in some of these rising interest rates, you can find some of these strategies that are going to be trading at some more reasonable valuation levels that aren't necessarily going to fall in some of those tech-heavy sectors that are really fundamentally driven by long-term growth prospects.
Todd, what if the market falters? I mean, it has been a growing tide of money flowing into ETFs, but it's also been 3 really strong years for the S&P 500. If we do get a hiccup next year, as some are expecting, with the Fed set to raise interest rates, what happens to ETFs, especially the best performing ones, which track the indexes?
Right. Well, the core products are going to continue to track, and you'll see that. I think we're going to see investors use ETFs as a way of rotating. So within fixed income, there are short-term or floating rate or senior loan ETFs that have started to gain traction in 2021 that we think are positioned to do well in 2022. ETFs like BKLN, FLOT, those are some of the fixed income products. We're likely to see investors rotate towards more higher quality oriented ETFs within the smart beta space, like QUAL and SPHQ, among others. Investors can rotate using ETFs. We don't think they're going to be bailing. We think we're going to see another good year of ETF adoption in 2022, despite a more normal market for equities as opposed to the 25% gains we've seen for the S&P 500.